Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, October the 10th. My name is Eric Wilkinson and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some strategies that you can implement into your portfolios, but please do that in your own way. Also, remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. We got French industrial production came in at 0.3%, expected to be 0.1%, higher than expected there. Also a revision to last month's number from 0.7 to 0.8%. Then industrial production out of Italy came in at 1.7%, crushing expectations of 0.7%. And then they revised last month's number up from negative 1.8% to negative 1.6%. So better revision there as well. So European region doing well on the, for the most part, the European region doing well on the industrial production side. Moving over to Great Britain, closer to us that way, start moving west, I guess. Great Britain's GDP came in at 0 unchanged, expected to be a positive 0.1%, so lower than expected there. Gross domestic product, not really a great sign, although last month's number revised from 0.3% up to 0.4%, so kind of a wash on that number there with the revision. And then Great Britain's manufacturing production came in at negative 0.2%, expected to be a positive 0.1%. And then again, they revised last month's number up from negative 2 to unchanged, so a 2% point increase there on the revisions. Pretty close to a wash. Great Britain's construction output, negative 0.7%, expected to be negative 0.4%, no revisions to last month's number. And then industrial production out of Great Britain, 0.2%, expected to be 0.1%, and revised last month's number up from 0.1% to 0.4%. So industrial production looking pretty good. Manufacturing out of Great Britain, not looking so great. Construction output in Great Britain, not looking so great. Now let's move it back here into the United States, and we have PPI, which is Producer Price Index. Month over month came in at 0.2%, and then core PPI, which strips out some of the more volatile aspects of that number. Producer Price Index came in at 0.2%, in line with expectations there as well. And we have a couple of Fed governors speaking throughout the day. That being said, wholesale inventories rose by 1%, expected to be unchanged. So usually when we see wholesale inventories rising, that's a bad thing, unless we expect the overall economy to be able to absorb that and the manufacturers are getting ahead of demand. So that is yet to be seen. If we consistently see those inventories moving and retail sales and things of that nature not keeping up with that, that's where we think the kink in the armor is, when we see those kind of numbers. All right, let's talk about the overall economic. And today being Wednesday, we usually get the crude oil inventories, right? I was talking about that yesterday, a little confused why I didn't see it in today's number. It's because we had that holiday on Monday. The numbers moved back till tomorrow. So we get crude oil inventories tomorrow. Now, crude oil is down by a little over $1 right now, almost $2, coming back down after testing the 78 Fibonacci level. You know, I've talked about this. With demand waning, we're seeing builds in inventories. We are not seeing the robustness in the overall economic picture that we were seeing earlier on. Therefore, all of those things together has got to bring down crude oil, I would have to think. So crude oil moving higher. And yesterday I did mention that I don't have any crude oil, and I actually am. I'm exposed to the energy through XOP, which is the oil and gas exploration ETF. So I mentioned that I didn't have any anything in oil. I do, and it is bearish. With I'm long the 43 puts in December in XOP. So I am looking for that move to the downside. Yes. Final answer. All right. So gold, it's staying in this range. That's about all I can say for it. It hasn't been able to recapture those to that 1200 handle. It's pretty darn close, and we're stuck in between these two Fibonacci levels. It's just really waiting to see what the equities do for the most part. Bitcoin, yeah, let's move along. It's about time to close out that chart for a while. All right, bonds. After yesterday's rally, I talked about this. I think it's going to migrate back to the point of control. Today, not looking so great, but I still think with the economic data that we're getting, it's not as great as we would expect. I mean, it's good. Don't get me wrong. We're expansion in the economy, but we aren't seeing that overheating that everybody keeps trying to say, oh, the economy is overheating. I don't see that right now. So bonds, I think, need to move higher, probably back closer to its value area low, which is going to be a resistance area, but I think that it's definitely going to go there. I think we've just overdone it to the downside now. VIX climbing up into the 18 handle. I don't know. Are we going to see the 20 handle? That's with the overall equities falling out of bed today. As you can see, the Dow Jones Industrial Average down big. I talked about this, thinking it was going to want to go down to the 50-day moving average or the value area high. When we get overextended on these upsides, it needs to come back down into that area, or at least test it to start getting some real volumes going around those levels where we start seeing bulls and bears fight over a support and resistance area. NASDAQ also down big, coming down and testing the Fibonacci extension, as well as my old Fibonacci high, which is the 100% there. That's an old chart from, basically the last year for the most part. But we're coming down, and the reason why I left it is because it lined up so nicely with the 50 Fibonacci there. So I left it because it is going to be a solid support level for the NASDAQ, and we came down, tested that, and bounced up and away from that. If we peel through that today, it is going to look like we are off to the races. Now, E-mini S&P is coming down and testing the value area high after just breezing through the 61 Fibonacci extension level, and now we're sitting on top of that value area high. Again, all of these equities are kind of lining up with the same support areas. It's going to be a real battle here, despite the fact that this isn't a major support resistance that most people are looking at. We know that from the market profile that this is a major support and resistance area. Once it gets over that, it just gets a little overdone, but people are going to try and defend that, which is what we're seeing right now in the E-mini S&Ps. And as you can see with the mini S&Ps, with the daily chart, as soon as we opened, there was no effort whatsoever to try and hold this market up. The market just rolled over and out of bed. As you can see, we are near the lows of the day. Couple of things that I've done. Yesterday, I talked about this on Twitter. I tweeted it out. We are doing a Pro Trader Strategies, sent out an invite for Thursday's webinar on the long straddle. I was looking around to yesterday on strategies and was thinking it would be perfect for the SPY, because it's, although we haven't gone anywhere, or it doesn't look like on this chart like we've really traded sideways, or we're getting pent up like that rubber band when we start trading in a tight range, kind of like what we're seeing in Bitcoin. Anytime you get that, you usually get this pent up energy where it wants to spike in either direction. I don't know if that's the case with Bitcoin, but that's what it feels like with SPY the last couple of days, where the market has gyrated back and forth. It felt like there was just a lot of tension going on in there, and I felt like that the market was going to snap in one direction or the other. I'm not really sure which direction it's going to go, so I decided to do the long straddle. It fit all of my rules in and around that I'm going to talk about tomorrow, so check that out. Go to protraderstrategies.com and sign up for that. Really important, because what my rules do is they're going to help increase your probabilities of success, especially with this type of strategy, which is a very low probability strategy to begin with. So increasing those probabilities ever so slightly will make a dramatic difference in our trading for sure. So with SPY, I went into the D's and did the straddle. I did the 287 straddle that I bought for $14.08 yesterday. Got filled on that. I'm just looking for a big move, outpaced. I thought, if it breaks below this support level of the Fibonacci here, that was going to send us down to the races, maybe even to the value area high. I think I even talked about this yesterday in the daily market commentary. So I'm looking for an outpaced move. I do have a lot of room I have to make up, but with that being said, the 87 straddle, I made up, what is that, $4 already today. I got another $10 to go, but at the end of the day, if we get down here to this area, that straddle is going to look brilliant. So that being said, it's also a protection on either direction with this SPY. So got into that trade yesterday late in the day. And XOP I wanted to talk about because I mentioned this yesterday that I had not, I didn't have any dog in the fight with regards to energy or oil, and I do. I have XOP here. So that is part of my portfolio. I just wanted to make sure everybody was clear that I did not cover that. And the other thing that I'm looking to get out of, or actually I think I just got out of it a minute ago, is in Deere. And in Deere, what I did, if you guys remember, I got long some puts, 150 puts, along with those same puts that I did with Caterpillar when we were looking at low implied volatility and we were looking for a bit of a correction happening in the overall market. That and volatility to expand, that was the perfect scenario for like Caterpillar and Deere. And also, coupled with that, the increased interest rates is going to cause some of these farmers to kind of hold off, maybe buying another piece of equipment. All of those things are not going to be very good and are going to be major headwinds for both of these companies. And so I decided to put on a couple of strategies to the downside on those. And I went in and did the December, bought the 150 puts in Deere for $5.65. Now, following my rules of at least a 50% increase in that strategy, got out pretty close at $8.25. I started out a little bit high, $8.05. I started out a little bit higher, but just marched it down. Probably could get out at a much better level right now. I think it looks like it's trading closer to $9. So I got out a little bit early, but once we started breaking down and was very close to my max profit on that, I decided to cover it ahead of today's market commentary. So maybe should have squeezed that one out a little longer. Who knows? You never know. Hindsight's 2020. That's about it for today. Tomorrow's webinar on Thursday is going to be on the long straddle. I'm going to go through in detail how to set this strategy up to increase your probabilities of success. Like I said, low probability strategy. How do we turn the tables into our favor? I'm going to talk about all of that in tomorrow's webinar. So go to protraderstrategies.com and sign up for that. Also, give me a thumbs up, thumbs down, like or dislike with this video. If you give me a dislike though, let me know what you want me to talk about, and maybe I can start implementing that into the daily market commentaries. All right, that's about it. If you can't take that, take it easy.